Hey everyone, and welcome back to my channel Whiteboard Invest. Today, we're diving into the world of crypto with some of the hottest news and updates. We'll be covering the SEC's proposed crypto regulation, the latest Bitcoin price movements, the overall market reversal, Bitcoin's surge to $66,000, the massive inflow into Bitcoin spot ETFs, the meme coin comeback led by People, Millennium Management's $2 billion Bitcoin spot ETF holdings, and North Korea's laundering of $147 million stolen from Hobby through Tornado Cash. Before we get into all that juicy stuff, make sure to hit that like button and subscribe to the channel if you're new here. I drop fresh crypto content all the time, so you don't want to miss out. Let's chat about the recent buzz around SEC's proposed crypto custody rule, SAB 121. It's like the SEC threw a curveball that's got the crypto market spinning. Picture this. Banks in the U.S. would have to jot down all the crypto they're holding onto their balance sheets. This rule popped up in March 2022, and it's been stirring the pot ever since. Now, imagine you're a big bank, and suddenly you're told you can't handle crypto trading products on a grand scale. That's what folks are worried about with SAB 121. It's like giving the keys to the crypto kingdom to non-bank institutions, and that's a risky move. Here's where the drama kicks in. Some say the SEC is playing politics with crypto, making President Biden pick sides on an issue that's hot on many Americans' minds. A Democrat named Nickel even penned a letter to SEC Chairman Gary Gensler, accusing the SEC of stepping out of line and not looking out for investors like they're supposed to. Nickel's not alone in this. He's betting that the Senate will side with him and toss out SAB 121 with a bipartisan resolution on May 16, 2024. But here's the twist. President Biden might just veto any attempt to overturn the rule if he thinks it goes too far. Investors are getting antsy too. They're worried they might have to look beyond U.S. borders for crypto custody, which could be riskier in the long run. Crypto companies might start eyeing countries with more relaxed rules, which could mean trouble down the line. And it's not just Democrats raising eyebrows. Some Republicans, like Representative Tom Emmer, are echoing the sentiment that SAB 121 could make the U.S. market less fair and efficient. So there you have it. A regulation that's got everyone talking and could change the game for crypto in the U.S. It's a classic case of regulation meets politics, with a dash of international intrigue. Let's see how this plays out, shall we? Before we dive into today's next market-breaking news, make sure you hit the like button and subscribe to our channel to fuel us up for even hotter content than ever. Wow! Bitcoin is finally breaking out of its recent slump. After hovering around 61K, 62K for the past week, the price has surged to 66K following the release of the official CPI figures. This is a much-needed boost for the market, and it could signal a breakout to even higher prices. I've been bullish on Bitcoin for a while now, and I believe that it has the potential to reach new all-time highs in the coming months. The CPI data is just one more piece of evidence that the economy is recovering and that investors are increasingly turning to Bitcoin as a hedge against inflation. Of course, there's always the possibility of a pullback, but I'm confident that Bitcoin is in a strong uptrend. If you're on the sidelines, I would consider buying some Bitcoin while prices are still relatively low. And remember, this is just my personal opinion and not investment advice. Always do your own research and manage your finances responsibly. So, the big news is that the Consumer Price Index, CPI, for April 2024 just came out. And guess what? It's the first time in 3 months that the CPI has taken a dip. And what a ripple effect it's had. Bitcoin, BTC, soared to a whopping $66,000, breaking free from its price slump that's been lingering for weeks. Here's the lowdown. The US CPI was lower than what everyone was expecting, which basically gave the green light for the entire crypto market to jump for joy. The inflation rate in the US took a chill pill in April 2024, inching up just 0.3% compared to March's 0.4%, and that's even lower than the smarty pants economists' prediction of 0.4%. This cool down in inflation has investors breathing a sigh of relief. They were all worried that if inflation kept heating up, the Federal Reserve might have to step in and hike up interest rates. But nope, not happening right now. And it's not just Bitcoin that's partying. Other cryptos like SOL, NEAR, and JUP are leading the charge, topping the charts as the biggest gainers in the past 24 hours. This fresh economic data has sent a wave of optimism across financial markets. Even the traditional S&P 500 index couldn't resist joining in, climbing over 1% to hit a new all-time high. That's a sure sign that investors are ready to take some risks again. Now let's talk liquidations. The CoinGlass stats for May 2024 are showing that most liquidations were on short positions. That means the market mood is flipping, and traders are betting on prices going up soon. But hold on. It's not all big moves and celebrations. The total liquidations in the last 24 hours were just 150 millions, which is pretty tame. It seems traders are playing it cool with BTC's unpredictable moves lately. Despite the market not making any major waves for weeks, the Fear and Greed Index has been hanging out above 50 points, and get this, on May 16, 2024, it jumped from 64 to 70 points. That's the market shifting from cautious to let's get greedy mode. In the ETF world, Bitcoin funds like BlackRock's IBIT, Grayscale's GBTC, Fidelity's FBTC, and ARK Invest's ARKB have been seeing some serious cash flow. Grayscale's GBTC is leading the pack with a daily net inflow of about $520 million. That's a lot of dough. And yesterday, SOL was the crypto star, shining bright as one of the strongest performers in the market. So, what's the takeaway? BTC hitting $66,000 and other major altcoins riding the price wave are clear signs that the market's got some pep in its step for the short term, and it looks like altcoins might follow suit. That's the buzz around the blockchain. The economy's sending some mixed signals, but for now, the crypto crowd has plenty to smile about. Let's see where this roller coaster takes us next. So, Fidelity's FBTC just took the lead in the Bitcoin spot ETF race, pouring a cool $131.3 million into the market. This move was like a defibrillator shock to BTC's heart, reviving it to a healthy $66,000. And guess who's riding the comeback wave? Our meme friends Pepe, People, and Whiff, soaring high with the Eagles. After a Monday that was as dull as a dishwasher, Tuesday came along and turned the tables for Bitcoin spot ETFs. It wasn't just FBTC showing off. Bitwise's BITB and ARK21 shares, ARKB, joined the party, bagging $86.3 and $38.6 million respectively. But here's a twist. While Grayscale's GBTC was basking in the inflow sunshine, BlackRock's IBIT was left out in the cold with a big fat zero. Remember the days when GBTC was the big bad wolf of the market, huffing and puffing with redemption pressure? And BlackRock's ETF was the steady hand, always buying? Well, times have changed. The total inflow for U.S. spot ETFs hit a jackpot of $303 million, the highest since May 3rd, giving Bitcoin a much-needed pep talk. Bitcoin's now strutting around at $66,000, while just yesterday, it was lounging at $61,500. Ethereum's not far behind, dusting off its shoulders and stepping back up to the $3,000 mark. But the real showstoppers? The memecoins. Riding the hype train from a legendary short-squeeze comeback and a market that's waking up from a nap, big memes like Pepe, Doge, Whiff, and Bonk are all posting numbers that'll make your eyes pop. Sitting pretty at the top of the growth charts on many exchanges is People, boasting a 40% increase in just 24 hours. And if you'd thrown some cash at People 2 weeks ago, you'd be doubling your money by now. Unlike the usual cat and dog meme coins like Pepe or Whiff, People is the token of Constitution DAO. aiming to snag a copy of the U.S. Constitution. And with the U.S. presidential election on the horizon, the community's starting to eye politically themed meme coins. Take Trump coin, for example. It's been on a tear recently. So there you have it. The crypto world's buzzing. And it's not just about the big players anymore. Meme coins are having their moment in the sun, and political winds seem to be giving them an extra push. Who said finance can't be fun, right? Hey, let's talk about Millennium Management's latest power move in the crypto space. So, as of the end of March, they've got a hefty $1.94 billion wrapped up in 5 different Bitcoin spot ETFs. That's almost $2 billion bucks. Here's the scoop. Millennium, this hedge fund giant run by the billionaire Israel Englander, has spread its bets across a few big names in the Bitcoin ETF world. They've sunk the most into BlackRock's iShares Bitcoin Trust, IBIT, with $844 million, followed closely by Fidelity's Wise Origin Bitcoin ETF, FBTC, at $806 million. Grayscale's Bitcoin Trust, GBTC, got a cool $202 million. ARK 21 Shares Bitcoin ETF, ARKB, snagged $45 million. And Bitwise's Bitcoin ETF, BTB, rounded it out with $44 million. But get this, even with all that cash in Bitcoin, it's just a small slice of their pie. Only 3% of Millennium's whopping $64 billion in assets. This info comes straight from their 13F quarterly report to the SEC. Now, Millennium isn't the only one throwing down on Bitcoin. The State of Wisconsin Investment Board, SWIB, just let slip they're holding over $163 million in Bitcoin ETF shares. And last week, Susquehanna International Group dropped a bombshell that they've invested $1.3 billion in 10 Bitcoin ETFs in the U.S. during the first quarter of 2024. They went big on GBTC, becoming its largest shareholder with a $1.09 billion buy-in. Other hedge funds like Apollo Management, Elliott Capital, Aristea Capital, and Hudson Bay Capital are also getting in on the Bitcoin ETF action. And all this is happening while Bitcoin is making a comeback, climbing over 7% in just 24 hours, and now chilling around $66,000. Talk about timing, right? It's like all these big players are betting big on Bitcoin, and the market's responding with a standing ovation. You know those North Korean hackers everyone's been talking about? They've been super busy, and not in a good way. They managed to swipe a cool $147.5 million from HTX Exchange last year. And get this, they didn't just sit on it, they laundered it through Tornado Cash this March to make it all hush-hush. The UN's got their magnifying glasses out and are on the case, digging into 97 cyber attacks on crypto exchanges that might have crossed the line with sanctions. Since 2017, these digital bandits have funneled over $3.6 billion from crypto platforms. That's billion with a B. Tornado Cash? Oh, it's infamous in the hacker world. It's like a magic wand for dirty money, making it disappear from one hand and reappear in another without a trace. Last year, the U.S. Treasury was like, nope, not on our watch, and slapped sanctions on them for being the go-to for criminals, including the notorious Lazarus Group, which is pretty much in bed with the North Korean regime. And the plot thickens. Alexei Pertsev, the brain behind Tornado Cash, just got a 64-month vacation behind bars in the Netherlands. The judges were like, money laundering? Guilty as charged. So, while the crypto world is all abuzz with Bitcoin's price bouncing back, the dark side of the moon is this whole sanction-skirting, money-laundering saga that's got everyone from billionaires to watchdogs on edge.
Alright, that's hottest news today. If you guys did find this video helpful, leave a like and subscribe our channel for more free content. Thanks for watching. Peace out.